All right, so this week I want to talk about this moment in time. I saw this chart I'm going to put up from our friends at ARK Innovation and Cathie Wood that most of you know. If not, check back to one of the videos that I made a few weeks ago talking about 3 people that I believe you should be paying attention to who are the genius investors of our time. And Cathie Wood is definitively one of them. She runs ARK Innovation, which is a asset management company with something like $75 billion under management that is making bets like we are and making investments like we are based on where we believe the future is going and where really it, at least for me, it already is. It's just that the markets are still a little bit behind, certainly where I am at and where Cathie is at. So she put this chart up, and I just want to read the text out for this. And the title of this chart really is what made me think of the topic to make this video about, which is why now. So ARK's research shows that the global economy is undergoing the largest technological transformation in history. And you can see on that chart the various big technological innovations that really moved human society forward, which is that the steam engine, railways and telephone, cars, electricity. And then we've gone through a sort of a period where we've really seen very little truly transformative technological innovation. And now we have this gigantic stack. And you'll see on the right-hand side, Cathie's got blockchain technology, and those of you who are in our services know that we are all in on blockchain technology. Genome sequencing, we call this precision medicine, and we're all in on that. Robotics, this is a combination of chips and artificial intelligence and putting all of these things together in a form where we also mix in a mechanical ability, and that's robotics. And we've got some amount of that, and we're going to be adding more as more companies come public. And truthfully, there's been very few publicly traded companies in this particular area, which is why we don't yet have a significant presence yet in this particular area. Energy storage. Well, you know that along with Cathie Wood, we have also been longtime holders of Tesla. We have a number of stocks in our portfolios, in batteries, in storage technology. So we're all in on that. And artificial intelligence is something that we have been talking about for many, many years now. So after watching this, I wanted to make my case, our case, if you will, for why now. And the first element of this is that we have so many technologies that are at this catalytic point where they can really make a massive impact on regular life. I went through all of those earlier, so I'm not going to repeat all of them, but I want to give you an example of one. I've had a Tesla now for about 3.5 years, and I got it with the autopilot software. And truthfully, when I first got it, the autopilot software, while it was a little bit sort of early stage, I was amazed at what it could already do. In other words, we were already beginning to combine data with information so as to be able to create a driving robot. And I drive up to West Virginia where I have a house, and on these hills, which have like a 6% grade, this car just hugs the center of the road and never lets go. You can drive at, all right, I'm not going to admit how fast I actually let the car go up these hills and downhill, but I can say that you can drive this car very, very fast. So I should really restate that. You can allow autopilot, the robot, actually I call my car Tessie. I let Tessie drive me at 65 plus miles an hour, downhill, 6% grade, change lanes, and it has no problems at all. And I just think just in my car, Tessie itself, so many innovations that capture our time, which is that you start with autopilot wouldn't be possible without extraordinary number of processors, chips. Then there are computers that integrate all of this data to create information so that it can make decisions in real time, integrating cameras as well. And then you think in terms of what a Tesla drives on, which is energy storage using batteries. And this is a gigantic leap as well for us in terms of an energy source. So already in just in this one thing, you can see a lot of different innovations implemented, which include everything from robotics, and even Internet of Things, because at any given moment in time, and this is true truthfully for every car, so don't troll me about how terrible Teslas are because they're tracking me. Every car today has lots of devices that track where it is in real time. And Tesla always knows where it is because there are a number of sensors that are transmitting itself, a lot of information that's being transmitted through the cell phone networks to your phone and to a network. And in a year or two, you are going to see on your streets, on every road that you go to, you're going to see more and more of these Teslas where people are using this self-driving capability. And I believe that for many people, it will be a moment where they will be like, whoa, the future is now here. And that's going to really cause a mind shift, I believe, in the investment markets as well, where people are really going to want to come and buy into these stocks. Because the essence of any innovation is that it creates new ways of doing things. And I brought up the example of driving using my Tesla. And if you're following me on Twitter, I believe I also posted an example of it, which is I also have a Tesla Powerwall of how it's changing the way that I consume electricity. I use the Powerwall battery storage and my solar panels to really power my house about 75, 80% of the time, only 20% on grid. So that's going to make a meaningful impact in terms of the utility business because, growth matters. And this point was really brought about recently where Cathie Wood was on a podcast with Bankless. Bankless is truthfully someone I don't know. Clearly, they have a newsletter and a podcast, and they're very forward-looking in terms of the banking industry or finance. And you can see from this tweet that Cathie and Bankless agree with us, something that we have been telling you, which is that crypto and crypto DeFi, Ethereum DeFi is coming to gut the banking industry. If you're in our services, we've had Ethereum in our portfolio for several years now. And if you're using another portfolio company, Coinbase, you can stake your Ethereum and get 4%. In other words, you can get a return that is so much bigger than what you can get from the banks. And this has been sustained for some period of time. I myself have staked my Ethereum, so I'm getting a nice return on my money versus what I would get if I left it at the bank. And one of the things that Cathie brought out that has been very clear to me, which is that the banks know, wow, and I can tell you this because the banks can see all the money that is coming out of the banking system and going into the crypto economy. And because it's coming from them. I know when I go to buy crypto, I'm taking money out from my bank accounts at various places. And for sure, they have access to that data and they can see that Coinbase and Robinhood and all of these new entrants are sucking money out from them. And while on an absolute basis, it's not a big amount, it does mean that on the margin, they are growing slower. And I can tell you that growth matters. When investors sense that growth is slowing down, they tend to want to sell those stocks. And so these new ways of doing things, whether it be Tesla in the mobility industry, energy industry, utility industry, crypto DeFi, and crypto in general, with respect to banking and finance, it's definitely being felt. And we have been telling you this for a long time, which is that if you're in these old world assets, these America 1.0 assets, in my opinion, this is obviously an opinion, you're playing with fire because while the absolute levels of decline are small, it matters on the margin, meaning like when you go quarter to quarter or month to month, the amount of deposits sitting at companies like and banks like Wells Fargo, they're declining day after day after day. And while the loss is not very great on an absolute level, It does mean that they are no longer growing and now they are actively in decline. So those are my first 2 points as to why now. Many technologies that are really at this point where they can make a big, massive impact on regular life. Second, they are creating new ways of doing things that are radically different, completely different than the old ways, whether it be driving in a self-driving car or using the crypto economy as your primary way of finance and money. So two big things. So the natural question that people will ask is that, well, Paul, if the potential is so great, and if all these people are changing, why are the prices still so low? Why is our portfolio just not skyrocketing up 1 billion% a day? Well, unfortunately, that's just not the way that markets work. The way that markets work is that ultimately prices are an expression of what human beings choose to do with their money. And most of us tend to look at investing through the rearview mirror. We want our stocks to show earnings, dividends, those kinds of things. And that's what we like to see, especially after a decade plus of crises and crashes. I mean, since 2008, I've gone and looked, we've pretty much had a crisis or some kind of a crash literally every 2 years. So the vast majority of people are looking for stability, safety, comfort. And one thing that the America 2.0 opportunity, which is what we call this period right now, or buying into stocks, companies, opportunities, and growth that is forward-looking, is that it will not give you that. Instead, you will get a lot of volatility, and you have to have a tolerance for risk. And your timeframes have to be much greater than just a few days or weeks or months. It needs to be in some number of years, because people will have a lot of doubt. Sometimes people are going to come into stocks, bid it up, and then exit out, and it's going to cause lots of ups and downs. And if you're not committed to the idea that we're in a period of transformational change, then you won't want to deal with the volatility. You're going to think it's too risky. And you're going to shrink your timeframes down to where you want to see your account going up every single day or every week or every quarter. And the truth is that in innovation, I know this from experience, that the ride is volatile, but the destination is something that is so big that it is well worthwhile taking on the volatility, taking on the risk, and having these long-term timeframes. And I know the other question that people say, well, Paul, I'm 70 years old, I'm 75 years old, I can't take this on, I need something that is going to pay off today. And the truth is that we may be inappropriate, and this kind of investing may be inappropriate for the vast majority of your assets. However, for at least a small piece, I believe that if you simply find the right position size, shrink your exposure down to where you can deal with the volatility, deal with the risk, and where the timeframes now become something that is acceptable to you, then this is still, I believe, a critical place that, in my opinion, every single investor should have exposure to, because this is where the world is going, and it's accelerating now. And the last reasoning for why now is that the prices are cheap, because people are still skeptical. People, as I mentioned, they want safety, they want comfort, they don't want to take risk, they want stability. And as a result, that prices are cheap. And the objection to this is like, Paul, have you seen these stocks? They've gone up 700%, they've gone up 1,000%. Yes, however, who could have imagined that we would have $5 trillion companies in 2021? I can tell you, even in 2010, the idea of even a single $1 trillion company was preposterous. So we are still very, very early in the early innings of these companies transforming the world, changing our economy, changing our life. And while it will be volatile, and I believe that these companies have a long, long, long way to go, because they are still cheap, because most people view them with skepticism, see them as too risky, and are not in them. So when other people eventually get to the point where they feel comfortable, they're going to come to bid the stocks higher, and those are going to be gains in your portfolio. So those are really the primary reasons why I would say now is the moment really to get into innovation. And the way that I'm going to tell you to do is, of course, to buy into Profits Unlimited. This is our flagship newsletter. It's multi-cap, meaning it goes everything from pretty much small to even one microcap stock, all the way to very large companies that are valued in the hundreds of billions of dollars. And if you're interested in that, click on the strong hands above that will send you to a 3-minute ad on Profits Unlimited asking you to subscribe. And I'll have another video for you next week. Until then, this is Paul saying bye.